My name is Matt Ramage. I'm with the Division of Financial Regulation, and I'm going to talk to you today about resources to mitigate financial impacts of disaster, primarily around insurance, but there's a few other things to talk about when we're talking about preparing for disaster, and hopefully we never have to deal with it, but it's something we need to think about. So let's get into it, hopefully. Okay. Why are we not getting it? Oh, all right. There we go. Now it's moving ahead. Hopefully it's moving right. DFR. DFR is a state agency. Most people don't know about it. Really what we're here for is to help protect Oregonians, provide information, access to services. My role is really one of education and outreach. DFR's bigger role, though, is about licensing and regulation of some key financial industries. And I'm going to kind of get into that a little bit and talk you through that and what we do. Okay. We sit under the Department of Consumer and Business Services, DCBS, and DCBS is structured with 5 primary divisions. The Building Codes Division, that's what is there to keep buildings constructed and safe. Oregon's OSHA, that's for keep the workers safe and the workplaces safe. Our division, DFR, the Division of Financial Regulation, and then the Workers' Compensation Board and the Independent Workers' Compensation Board. That's the 5 main functions underneath the Department of Consumer and Business Services. It's a mouthful, and most people, they look at me and their eyes glaze over when I talk about it. But DFR has a laundry list of things that we're involved with. At the top of that list, and the lion's share of it is insurance, and that's the biggest piece of it. We are the licensing entity and the regulator of insurance agents and insurance carriers for the state. We also regulate mortgage services, annuities, securities, student loans, the list goes on and on, pawn shops and title lenders and other finance companies, collection agencies, even manufactured structure dealers. And we just recently added data brokers. There was a law that was passed at the beginning of 2024, not realtors, but I saw that in the chat. No, we don't actually manage realtors, interestingly enough. So, but the data broker one was a law passed at the beginning of 2024, where the companies that collect personal information, biometrics, all that information that can be used and then resold for the purposes of marketing, they now have to register in the state of Oregon. And so we have a function within DFR that collects that information, licenses those companies, and regulates them if they're not meeting the requirements, and also then educates consumers on their rights with respect to their data. So it's their whole data broker function. A really important part of what we do at DFR is provide a consumer assistance or advocacy function. And this is an important one because oftentimes consumers don't know all of their rights. And perhaps you've engaged with your insurance agent or your insurance carrier about a claim issue, and you've done everything you possibly can. You've acted in good faith. You've submitted information. You feel like you've submitted the things, and it should be covered. This is a claim that you believe, for all intents, should be handled properly, and you've hit the wall. This is when you should be reaching out to our advocates. They can help you with some really general questions. They can help you go through your insurance contract, perhaps, and read the language, because insurance contracts are really a mess to read. They're really designed to confuse because most people don't read their insurance contracts. And our advocates can help you through that process. Sometimes they're going to help you through that and go, well, here's that little section that says why this is excluded. Or it could be that they say, here's why it should be covered, and let's contact that company on your behalf and help you through that process. Or it might be that they recommend that you should be filing a complaint. Now, we don't file complaints on your behalf, but we do help you through the process of how you do file complaints. In 2023, we don't have the 24 data quite finalized yet, but we helped over 16,000 Oregon consumers There were nearly 5,000 complaints resolved and over $8.7 million returned to Oregon consumers as a result of that process. So it does work. It's a really important process, and it's free to Oregon consumers. So if you feel like you ever need help, there's no harm in calling. You can give us a call through the 800 number or go to the website and check them out. There's also a whole bunch of resources available online in publications. And if you ever come to one of our in-person events, we have these in print as well. So we're not telling you what to do. That's not my role. We're all adults. We get to make decisions. Our function is merely to provide information and say, here's info. It's intended to be factual and timely, but at the end of the day, we all get to make decisions that are best for us based on the information we have and our life situations. But we have information on insurance and investing and mortgage lending and healthcare and drug price transparency and all sorts of things. So when you visit the website, you can see things categorized in various manners and peel off whatever you want. Whatever is interesting to you, have at it. Take it, review it. Again, if you have questions, contact the advocates. They can help you out there too. Okay. For those of you who have been in Oregon for a while, I've been here my whole life. It's been a couple of years. It's a beautiful state. It's a very unique geography. We've got the coast, we've got mountains, we got high desert. And because of that, we are exposed to some pretty unique potential threats. We've just come off a record-setting wildfire season, over 1.9 million acres burned. I think that was over $350 million of expense to the state. So that threat is very real. We have a flood threat from tidal waters and rivers, wind and ice storms potentially, and the science says that there's likely going to be an earthquake that hits us through the Cascadia subduction zone. So I say this because these threats are real and imminent, and we should be planning for them. Some people will say, nope, not going to happen, and they succumb to this normalcy bias. And it's the day after those things happen when they go, oh, I should have planned. Our intent is to provide people information to plan ahead. And that's the whole point of our presentation, is to say, plan ahead, look at what you've got, do what you can now. Okay. In disaster prep, you really want to get past that normalcy bias and hopefully understand that these things do occur and do what you can. It works best for you. And again, insurance is not inexpensive, but understanding what coverages are available and what risks you have to protect you can find a balance, hopefully. We're going to talk about how you can assess and mitigate hazards where you live, evaluating what you need and what coverages are appropriate, creating an inventory. There's a very detailed way to do it. There's also a very simple way to do it. Really, again, you got to do what works best for you, but having some level of an inventory is going to make your life a lot easier if you do have a loss. And then having a go bag of some sort, especially for some critical documents. If you lose some documents, it is a enormous challenge to go back and prove ownership of things and recreate stuff. But if you have copies or actually have originals, it's a nice thing to have. And then I'll talk about the claim process. So get through that. So the first aid kit you want to have from a financial standpoint is having either copies or the secure originals of your financial documents. And these are things like copies of ID, driver's license, your passports, social security paperwork. This is really important to have. And if you keep these things in physical form, that's fine. You just want to make sure that they're in a protected location, either a fireproof box or a bag that you're going to grab when you're going to leave the house. Because the challenge is, if you're evacuated and you don't grab that bag or box and you can't get back to it, and that's the only copy you have, well, you're kind of in a bind. Now, the other option would be that you keep copies digitally and you can access them from anywhere. I happen to like digital because I can access them from my phone, and I'm kind of a tech geek, and that works well for me. But whatever works for you, embrace that. And I'm not going to tell you what's the right thing to do. But again, thinking about documents, IDs, want to have those for everybody in the family, and copies of them for sure. Really important papers, documents about marriage or divorce. Those are the ones you want to have. Birth certificates, copies of the insurance policy. You really want to have a copy of that policy to know what your limits are and your deductibles, so that if you do have a loss, you can have that as a reference point. If you can get to it online, that's great. That's an easy way to do it. Your loan documents, if you happen to have a mortgage or a loan, you wanted to have that, property tax paperwork and tax returns. And then there's an assortment of legal documents like wills or medical directives or anything along those lines. And then oftentimes people forget things like pet records, your vet records, your immunizations for your pets, and those sort of things. Important to keep those sort of things as well. Again, if it's a physical copy, have a file and a copy of that you can take and grab and go, or a digital one. Here's a big one that a lot of people don't realize. Cash is really important when there is a disaster. People think, oh, I'll just run to the ATM and get some cash out. Problem is that oftentimes when there is a disaster or a fire goes through a community, power lines get knocked out. So the power goes out. Oh, it's no big deal. ATMs have power backup. They'll work anyway. Could be. But also, cell towers go out and nothing works. And so for some cases, several days, there's no communication and no way for people to actually get cash. And we've had communities that are literally cut off with no power and no communication of any kind for several days. So having a bit of cash on hand is a good thing. So keep that in mind. All right. When you assess your actual property and the hazards that are there, this gets into sort of the firewise and the defensible space and home hardening. I'm not going to go real deep into this, but it is important to think about this on multiple levels. One is the first level is it's going to help protect your home against catching on fire, because the number one reason why homes burn is flying embers that are blown into properties. And so you want to see what is on the property. Number one, it's about organic material, trees and limbs and those sort of things that are close to or over your home, over the roof. So you want to inspect that. If there's got trees that are close, you want to trim those back. The other thing is that insurance companies are really picky about trees and limbs that are close to and over the roof line. And oftentimes when you're shopping for insurance, they're going to say, nope, I'm not going to let that happen. And they're going to peel that back and kick you off. So you want to do your best to keep that trees back and create that defensible space. Defensible space is a buffer zone around the foundation of your home. And we're not talking about creating a parking lot. That's not what Firewise or defensible space is. It's about a simple amount of 5 feet around your foundation to keep away organic material. And then you go and thin out as you go further out. It's not cutting every tree down. It's doing some relatively simple things to mitigate the amount of combustible material that's close to your home. You also want to eliminate the ability for flying embers to get into or under your home. And so foundation vents that are open, you want to make sure you put fine wire mesh so embers can't get underneath there. Really, really important. And for those of you that might have wood shake, wood shake on your roofing or on your siding, it's trouble, because it's just like tinder. And for a lot of reasons, a lot of insurance companies just run and hide from that. They won't take policies that have got shake roofing. So you gotta, if you can, if you've on a path to re-roof your home, it's beautiful. I personally love the look of it, but as an insurance agent, I couldn't find carriers that would take it. So think about um, fire retardant, fire resistant roofing materials and siding materials. We can help you a lot there. The other thing to look at is seismic retrofitting. If your home was built prior to earthquake requirements, um, the expense can be rather extreme, but think about if an earthquake hits and your home falls down, rebuilding a home is pretty extreme as well. So, not saying you need to do all the stuff at once because that's a huge bill, but the things you can do, the covering the foundation vents, the cleaning up of some of the organic material around your home, like, even pine needles away from the foundation. Those are relatively small steps that can go a long way to protecting your home. And even simple maintenance of your home about making sure the roof is clean and the gutters are clean and you're making sure water is not running in and getting in under the foundation. Those are steps that you should be doing just to make sure that your house is protected. Okay. A visual example of the house on the left with traditional wood shake siding and bark dust around the foundation. House on the right has got cement fiberboard lap siding and rock around the foundation. And you can't quite see in the picture, but it's got flying burning embers being blown, which is simulating what a wildfire is doing. And what happens is the shake siding catches on fire really, really quick. Um, I think there were multiple steps of when earthquake came in. They started in the early late 60s, and then there were multiple phases by the mid to late 70s. Earthquake requirements became pretty standard. So generally speaking, if you have a house that was built prior to about early 1960s, it's not going to be built to any level of earthquake. So unless you have a builder that was just ahead of the times. Okay. So I'd have to go back to be real specific. I don't have the exact date in mind, but that's the standard on earthquakes. Okay. So this is the image again is just real quick on showing you what the benefit of doing some firewise and some defensible space. And it doesn't necessarily mean you have to completely reside your house, but even getting bark dust away goes a long way toward helping protect your home. So when you're looking to evaluate what your insurance needs are, it's important to understand the type of policies that are there and the coverage that's available. What a declaration page looks like and how to review it, that you really should review it each year because when it comes up for renewal, it's kind of on autopilot to a certain extent, except for the expense, which pretty much always goes up and it makes everybody kind of gasp, myself included. But if you've made changes at your home, if you've acquired more stuff, if you've done any kind of remodeling, it's really on you to make sure that your coverage is correct. So because you're an agent's not going to know those things. And if your coverage isn't right and you end up having a loss, you could have a problem. Or if you've introduced something that is now has another risk that's on the property and you don't divulge that to the insurance company, you potentially are creating a situation where you're now misrepresenting the risk profile, and you could create a situation where the insurance company says, we didn't know that, we're not covering you now. So you want to make sure you provide appropriate information and make changes. Okay. Oregon is a standard fire state. And what that means is that on a typical insurance policy, and I want to make sure I use this word really intentionally, typical, because every policy is not the same. You want to make sure that when you look at a property policy or an auto policy, yeah, they should be written in a standard way, but the language is going to be a little bit different. So it's important that you read it. But on a home policy, the typical coverages, and the very first one that's always listed as what's covered is fire, because Oregon is a standard fire state. That means that fire is covered. Wildfire, a kitchen fire, a chimney fire. all fire is going to be covered on a standard policy. The only fire that wouldn't be covered is if you lit your house on fire yourself, an intentional act. And I don't mean that jokingly. I mean, really, if you did it on purpose, they're going to say no way. Now, if for some reason there was an exception written into the policy that they were trying to say, in this particular area, we're not going to cover wildfire, that could be a possibility, but it would be a very explicit exception on a policy. And you'd want to make sure that you understood that when you accepted that policy. So, really, really important that you read your policy. Um, Caps on insurance premiums. There are not currently caps on premiums, and I'll talk about rate increases a little bit and later in this, but there's a process that they go through with respect to reviewing rates. So I'll get into that in just 1 second here. So the standard stuff that's in there is fire, weight of snow and ice, wind and hail, power surges, falling objects, theft and vandalism, and a few other ones that are standard. On a typical broad coverage policy, there's about 14 perils that are going to be covered. What's typically not covered, and this is really important, when on a property policy, you're insuring the structure, meaning the actual physical home and your possessions, and then maybe the liability of if you were to cause harm to somebody else. You are not insuring the land that it's on. So as a result, you're not going to have coverage for earthquake or flood, landslide, sinkholes, those sort of things on a typical policy. Now, on a much older insurance policy, maybe you've had one from 10 or 15 years ago, they may have done an endorsement to put earthquake or flood on there. So I'm not saying it's not possible, but on a typical current homeowner's policy, you're likely not going to see earthquake or flood. You can get earthquake and flood insurance as a separate policy through either a private carrier or through a federal program with flood and the NFIP, National Flood Insurance Program. But again, really, really important that if you want those coverages, that you can't assume that it's included in your homeowner's policy, that you need to ask, make sure you understand what the coverage is, and then pursue that as a separate coverage if you don't have it. And if you're shopping and you have coverage that includes earthquake on a really old policy and you're going to shop for new stuff, make sure that you compare the coverages side by side so you can see what they look like. Okay. What is not included also on a insurance policy is maintenance stuff. We're responsible as homeowners to maintain our property. We're responsible for the care of the roof. So if you've got a standard 3-tab roof and it's getting older and wearing out, we don't get to call the insurance company and say, well, my roof is starting to leak because it's 30 years old. Yeah, it's horrible. I myself am starting to face that reality. I'm probably going to have to replace my roof here in a couple of years. It's not an insurance claim. As a homeowner, that's an expense I get to incur. I'm super excited about. It's insurance is there for the big ticket items, the things that are actually damage as a result of a peril. Okay. Differences between a homeowner's and a renter's policy. The primary one is going to be that a homeowner's policy is going to cover physical structures, like the dwelling itself, and the other structures on the property. Other structures being like fences, decks, maybe a barn or a detached garage. And then you have your personal property liability and additional living expenses. Those are things that are typically in a homeowner's policy. And if you have a mortgage, you're going to have a homeowner's insurance policy. On a renter's policy, you don't own the structure, so you can't insure and protect the actual dwelling, but you can insure your personal property in it. You can get insurance for liability to protect in case you cause harm to somebody else. And you can get insurance for additional living expenses and a few other endorsements if you want. And typically landlords are going to ask that you get renter's insurance as a condition of being a tenant somewhere. Not always, but typically. So those are kind of the two distinctions between renters and homeowners policies. Again, a little more detail on the coverage types. Dwelling, it's going to help pay for the to repair or replace the actual structure. And you really want to make sure you understand the replacement cost. So insurance company and agent, they're going to come up with their own replacement cost estimate. Each company has their own tools that they use, and they're going to say, hey, we ran it through our estimate based on your description of the home. We think that this 2,000 square foot home is going to be valued at, and replacement cost is $500,000. And you may say, yep, I think that's completely accurate. And you agreed, you move on. What it's not going to be based on is the market value. We're not talking about the Zillow value, like what you paid for the home. That's not replacement cost. It's the cost to build the structure. So very different number. Replacement cost is what it is to rebuild the structure, not what it is to buy it. And what you're buying is the land and where it's at and the structure itself. Replacement is the just the building of it. Now, if in the course of the last renewal cycle you've done remodeling to your home and you've added square footage, or you've significantly done upgrades to the kitchen, your replacement cost may have gone up. So you may need to be increasing it more than what the insurance company knows. So you might need to make some adjustments there. Optional coverages to think about is extended replacement value, which means in the event you have a catastrophic loss, like a fire or a tree falls on your house or something really devastating, and you've got your home insured for the full replacement value, again, $500,000, but it's going to take more than that because material costs have gone up or labor costs have spiked or something along those lines. You can get an extended replacement cost endorsement on most policies, and it's usually a percentage, like 25% or 50%, and it doesn't cost very much. And you're not paying for a hard dollar amount. You're simply saying, in the event that it's necessary, I get an extra 25%. So as an example, 25% on 500,000 would get you an extra $125,000 if necessary, if there's a catastrophic loss. It's a great way to give you a little extra buffer. And when there is a disaster and there's a material crunch, prices go up and labor prices go up, it's kind of a good thing to have. So those are nice things to have. Building codes, that's probably a good one to think about as well, because if building codes change and you're asked to build to a different standard than what was in place when the home was originally constructed, the insurance will recognize that and give you some additional coverage. So again, these are all endorsements you can look at. Anything you do in insurance, you can always just ask for a quote. You don't just have to add it and eat the cost. You can always ask your agent, quote it, tell me what it's going to be. So something to think about. Other structures. These are things that are not attached to the home itself. Sheds, fences, decks, detached garages. And this is important. If your garage is physically detached, meaning not by the roof line or not by a wall, it's detached. And if you happen to have a really nice detached garage that's finished inside or has a living space, and you don't have enough coverage under the other structures portion of your policy, you might want to revisit that coverage piece. Okay. Went too far. Contents coverage, which is your personal property. This is your stuff, your housewares, your clothing, your things. There are specific sections within personal property that are going to have limits. Things like jewelry, firearms, collectibles. Each policy is going to be written a little bit different and may have slightly different limits, but generally they're going to be a couple $1,000s. So as an example, let's say you got a 3-carat diamond ring that might be worth $15,000 or more. your policy is probably going to max out at maybe $3,000. It's nowhere near enough to cover what that ring is worth. If you want it to be insured for its full value, you're going to need to put an endorsement on the policy, probably have it have it, an evaluation done on it, and submit that to the insurance company. If you don't want it insured to its full value, that's okay, but you need to understand that you're only going to be insured up to what the limit of the policy is. So be aware and read your policy and know what those limits are. Same with firearms. You might have, if maybe you're a hunter and you've got 3 or 4 rifles in the safe. You easily going to go past the limit of the policy, most likely. And if you were to lose those in a theft or a fire, you're not going to be fully covered for the most part. So you want to understand those limits. A really important piece of any insurance policy is additional living expenses. It's also referred to as loss of use. This is coverage that protects you if you can't stay at the residence. And what would prevent that from happening is there's damage. Let's say there's a fire and you can't stay there, or a tree branch falls through the roof and it's raining in your house. You can't be there. So while you're being forced to live somewhere else, that additional living expense coverage is going to pay for the hotel expense or the rent where you're living somewhere else. It's going to help offset your meal expense, perhaps your animal boarding expense if the animal can't stay at the new location. If you're forced to stay quite a bit further away from where you currently are, it could pay for transportation expenses. So it's a really beneficial coverage on an insurance policy, which a lot of people aren't aware of. So something to know about and know what it looks like on a policy. Here's a typical declaration page. It's really simplified just to see it. It's broken up in sections of the section 1, which is property, and section 2 is liability. So coverage A is dwelling, and the limit on this particular policy is $200,000. And the deductible is $1,000. So you see that the premium is $1,500 on this particular policy. Coverage B is other structures, and it's at $20,000. This is pretty typical for a standard policy. By default, it's going to be other structures is 10% of the dwelling coverage. Doesn't mean you can't change it. It just means by default, it's written at 10%. If you need it to be higher, you would talk to your agent and say, no, my other structures, I have quite a bit more value in them. I need it to be at $100,000. I need it to be at $50,000. And the cost of the coverage would go up accordingly. This deductible is also at $1,000. Then your personal property is at $100,000. Again, this is at a default percentage. In this case, it's at 50% of the dwelling coverage, which is pretty typical. Oftentimes, it's either at 50% or 70% of the dwelling, depending on the insurance company that's at play here. So again, you can adjust that up or down. This one's unique, though, because this deductible is lower, and it's noting that it's at replacement value. This is a key thing to look for on a policy. There's a difference between replacement value and actual cash value. The key thing is actual cash value is the diminished value of an item, which is really saying, hey, I bought this couch 10 years ago. When I bought it, it was worth $3,000. Obviously, it's 10 years old. Based on the fact that it's been used for 10 years, it's now actual cash value worth $600. That's what the insurance company is going to give for you as an example. As replacement value, it's going to be, hey, that's a 8-foot leather couch. To replace it, it's going to cost $3,800. You're going to get replacement value for it. So replacement value is a better coverage. It's more expensive, but it's certainly going to protect you better. So you might want to, when you're shopping and looking for your coverage, you want to see what both of those are. You can ask for quotes either way. Liability, this is the protection for alleged or actual injury you might cause to somebody else. This is giving this person $300,000 of protection per occurrence, and it only costs $40 for the year. If this one was increased to $500,000, I would bet this only goes up maybe 15, $20 a year. So again, when you're looking at a policy, it's absolutely fine to ask for, hey, what if you adjust these up or down and see what the impact is? The other coverage added here was medical payments to others. This is if someone were to get injured on your property. This offers $5,000 per person. And you can, again, look at coverage limits that are higher, 10,000, 15,000 if you want. Really depends on your potential risk profile. And it's fairly inexpensive. And an example of a jewelry endorsement, $10,000 of additional coverage for jewelry, and it cost $100 on this policy. Okay. When you're shopping, you really want to understand what the home's value is, and it's really on us as the homeowners. The insurance company is going to come up with their best estimate, but if we know different, if we know the home is got a higher replacement cost, we need to advocate for that. We need to advocate for any endorsements to make sure that they're accounted for in the policy. Because if there is a loss and something's not listed on the policy, they're not going to cover it. They're simply not going to do it. And it's important to shop and get quotes from multiple carriers. And I can kind of walk you through that in a second here. You do want to make sure that when you're reviewing quotes that you're comparing things as much as you can at similar levels, and looking at the deductibles, and you can tweak the deductibles. I would say push the deductibles up to a level almost to where they're, this is an opinion, almost to where they're uncomfortable, so that you can see what the savings is in the premium, because it's very real. Your insurance premium is what you're always going to have to pay. That's the guaranteed thing. You have to pay the premium, and you hope you never have a claim. And so the deductible never comes into play. And so if you go from maybe a $500 deductible to $1,000 or a $2,500 deductible, well, if you never have to submit a claim, who cares about the deductible? But if you had a catastrophic loss and you had a deductible that maybe was increased to $2,500, that $2,500, and you could cover it if you had to, but it saved you significantly on your premium, might be worth it. So it's worth getting a quote, is my recommendation. So here we go back to the rate issue. And I'll get there in just one sec. It's helpful to have an appraisal on your home, although it's not inexpensive. Considering that appraisals are generally, unless you know someone who's going to do it for free, can run anywhere from $300 to $500. So if you're okay spending that money, yeah, it can definitely help you if you have a current appraisal. But it is going to be an expense to you. So how DFR operates with respect to rates and insurance companies is that the role of DFR is to regulate the rates and make sure that insurance companies are following the laws. And what the law is that we have to make sure that the premiums that are being used are not excessive. And that sounds kind of silly because they seem excessive, that they're not inadequate, and they're not being unfairly discriminatory. So how that works with carriers is that each year the insurance carriers have to look at what their payouts have been for the prior year, what their current policies are that they're holding for current policy holders, and then they have to project, based on all their actuarial data, what they believe they're going to continue to pay out and how much money they have to bring in. And so they then have to say, well, we have to make our rates increase this or make an adjustment of whatever it is. They have to then submit that data, very detailed statistical data, to DFR for review. It is called a, well, it's not what it's called, but they submit that rate, that's submit and use format. If it doesn't pass the statistical review by DFR, meaning if the companies calculate that they needed to increase their rates 20%, and they decide, well, we calculated 20%, but we decided to only increase them 10% because we want to grow our market share, that would be an inadequate rate increase because they're not protecting their current policyholders enough. And I doubt that's going to happen, because what normally is going to happen is they may calculate, we needed to do a 20% increase, but we want 30 because we wanted more. That's excessive. And DFR would say, no, 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 your calculation was this. That's what you have to take. So they would get flagged for that. The one that's a little more difficult to capture is the unfairly discriminatory. And what insurance companies are bound to do is to apply the same rate increases for like risks and like insured. So if you have the same property and the same risk profile, they're obligated to offer the same rate. And it's oftentimes hard, rather, to say the same property and the same person are exactly the same risk. But when that occurs, they're obligated to give the same rate. What is causing these massive rate increases? I skipped that because I went too fast. Is huge increases in disaster claims since 2020 through 2023. $3 billion has been paid out by insurance companies in Oregon. $3 billion, and that's what's causing it. So the accompanying labor costs and material costs is part of that $3 billion. So that's really the crux of it, and the bulk of that's wildfire. So that's behind it. From an underwriting standpoint, the pieces that are driving it is the replacement cost of the home. That's the bulk of it. That's the big chunk. It's location of where the home's at. The location is also going to link to fire protection. So if you've got a home that is remotely located, if you got 10 miles away from the nearest staffed fire station, which puts it at a PC 10 or worse. PC 10 is the worst, actually. Insurance companies don't like it, and they're likely not going to offer quotes if it's at a protection class. That's what PC stands for. They want to see lower protection classes, and the reason being is that if it's a property that they insure and it is reported that it's on fire and its fire station responds, by the time someone gets there, it's probably going to be a near total loss if it's a PC 10 because of the response times. So that's just sort of the crux of the problem with remote properties. So that's how location and fire protection tend to work together. The other property specific issues are going to be the home's age and condition. So older homes will often be rated at a higher level because they could be, if it's like a vintage home, would have a different status with respect to rating. And then condition. If it's a home that is really well maintained, that's a plus. If their homes are going to be kind of maybe beat down and not maintained, and the siding is, paint's peeling, and maybe there's some dry rot here or there or broken windows, by all means, the insurance companies are going to have issues with that. So condition's going to come into play. Roof condition is a huge issue with insurance companies now. Okay. So they're looking at oftentimes roof that is, if it's not 15 years or newer on a lot of policies, if we're talking about a composite roof, many companies are running away from it. Okay. So then construction type. So standard frame built home, manufactured home, brick homes. They got a foundation that's a slab. Is it got a basement? Is it built on post and pier? I mean, all these things are factors that the underwriters are going to use to adjust the rate up or down. So those are all kind of property specific issues. But then you get into sort of the insured issues, like your credit score, your financial history, your insurance history. Have you had a policy before? Those things are factors. Your claim history. So if you've had multiple insurance claims, that will affect your insurance history. If you've had claims at other properties you own, it can affect your insurance history. And if there are claims at a property that you're looking to purchase, even if they aren't associated with you, they will come up on a insurance report when you're looking to get a quote on a new property. So all of these things come into the puzzle that go into the statistical analysis that underwriting does. So it's a really complex scenario that needs to be considered when you're looking at insurance. So we all get them every year. You get a renewal notice. If you get one that says, "Hey, your rate is going up an outrageous amount," um, I'll get to that basement question in just one second here. If you get that notice that says, "Hey, your rate's going up," and I'm just going to give kind of a generic number, 20%. I'm going to tell you that's probably pretty generic and decent. If it's going up 50%, 60%, 80%, that's a heart stopper. I mean, and I'm being real upfront and pretty candid with you. And I would say, first and foremost, why? You have every right as a consumer to ask why. Um, and you have the right to ask why, and why in writing. And if they don't give it to you in writing, then they're not meeting the requirements of state law. So ask for things in writing. If they give you a notice of being non-renewed, they absolutely need to give you a reason in writing. And likewise, if they're canceling you, you need to get a reason in writing. The reason why it's important to get explanations in writing is that if there's something you can do to mitigate that, if it's a tangible issue on the policy or the property, if they're saying, "Hey, the railing on the deck is broken," if there's a hole in the roof, if there's something that you can fix, then you can fix it. And hopefully you can reverse those decisions. Because the reason is, if you take that and you go to shop somewhere else and there's something actually wrong, it's likely going to come up somewhere else. You want to know. So you want to understand that if you have to shop somewhere else. Okay. Um, with respect to a basement, it really depends on the location. So if you've got a basement and you're in a flood area, basement can be a bad issue. Um, if it's a basement and you're not in a high flood area, probably not an issue. If it's a basement and you're on a home that was built prior to earthquake um, building codes, could be a problem because you could have issues where it's going to crack and it's going to crumble. So, I mean, there's so many factors that come into play, and so it's just one of those things. So, I mean, it's hard to say give an exact answer, but for the most part, it's not going to be a problem, but it's conditional. So. Um, Discounts are something that I would always encourage people to ask for. And it sounds kind of cliched, but asking is free. Do I have all the discounts that I possibly can get to? Am I getting a veterans discount? Am I getting a discount for bundling my other lines of business? Have I got my auto and home in there? Do you have an umbrella policy? If you have multiple lines of insurance and you have them with different companies, first thing I'd ask you is why. And maybe there's a good reason. You should try to put them together because more often than not, you're going to get a discount by putting them together. And maybe you want to put the auto business to where the home is or the home to where the auto is. And again, quote it. Don't just cancel and move it. Quote it and see what it looks like if that's going to save you some money. Um, but ask if it's going to save you some money. Another important thing is that you can ask every year to have your policy re-rated. And what that means is that when you get your policy originally issued by the insurance company, it's based on your insurance score at that time. Once that's done and the policy is in force, they never re-rate it because it's enforced by that company unless you ask them to re-rate it. Now, if they re-rate it and your score improves, then your rate should go down, meaning your premium should go down. If your score gets worse, they can't apply the worst score. So it's a win-win for you. It's not going to hurt you. It can only help your score. So you should do that. Then you want to look at coverage levels. Never, ever, ever take your coverage on your dwelling to a point where it's going to be below the replacement cost, but make sure they're at the right levels. Maybe your personal property is too high. Adjust those. And then talk about deductibles. Like I said before, maybe take your deductibles up. That can help your premiums. If none of that's helping, shop. There's over 100 carriers in the state of Oregon that are offering property policies. I can tell you right now, they're not all going to offer you a quote, but it doesn't hurt to look around, see if someone else is going to help you. If you're not getting any action from the standard carriers in the market, standard ones are the national carriers like the State Farms and the USAAs and Liberty Mutuals and those ones. I'm not endorsing any one of those, but if you get rejections from the standard carriers, the other options in the standard market is Oregon Fair Plan or surplus lines, and either of which are an option. Not great. Surplus lines is going to give you full coverage at a higher price because surplus lines are open to higher risk potentially, just at a higher rate. Not a guarantee they're going to pick it up. Oregon Fair Plan is in place to say we're going to give essential coverage, bare bones coverage, with not a lot of fluff, but it's really stripped down. And so if you find nothing else, you might want to take a look at Oregon Fair Plan if you had to. Okay. If you are needing to shop for an agent, you do want to make sure they're licensed, and you can do that through our website just to make sure, check their license. If they're not licensed, don't do business with them, please. Make sure they're someone you like. Are they listening? Are they someone that you agree with? Are they hearing you? And then, you want to ask around. A lot of times it's about referrals. Make sure there's someone that you can trust or someone that trust them. And if not, move on. There's a ton of agents out there and companies. Make sure it's someone that you connect with. Okay. Building an inventory for your property and your possessions can be complicated or it can be simple. The easiest way, take some pictures. Go through your room of your home, take pictures, or even easier, take a video, nice slow video of everything you own. If you want to get real detailed, do a written inventory of everything you have with model numbers and receipts. Whatever you can do, some record is better than no record. There are apps you can get to do this, but do whatever you can to have some record of stuff. It's going to make it a whole lot easier if you have a loss. There's some references on our website, but I would say, again, start where you can by making a list. And the easiest way is with like your phone, pictures, or video. Super, super simple. Okay. The kit, from an emergency standpoint, you want to talk about if there is an emergency, you want to make sure you've got stuff you can survive for a few days. Food and water for several people. You can get details on that at ready.gov/kit. Hopefully, again, these are things you never have to really get involved with, but these are things like, food and water and pet supplies, clothing, flashlights, a radio. I mean, if the power goes out and you can't get any other information, you want to make sure you have some basic stuff and some cash, like I talked about earlier. Okay. When we get to claims, there's a great document on our website, the Post-Disaster Claims Guide. Kind of walk you through that process and what to do and what not to do. What's super, super important is that if you have a loss, that you don't want to start just ripping through stuff and throwing things out before you've talked to your insurance company. They're going to want to see things and document stuff before you make that claim. So you want to make sure you take pictures and that you get that claim process in motion before you dispose of anything. Keep your receipts if you incur expense, if you've tarped stuff or anything along those lines. You just don't want to take action before you've had contact with them. Okay. Also, if you can, and if you're not putting yourself at risk, as homeowners, we have a responsibility to mitigate damage, meaning if we can prevent like further water damage from getting in through a hole in the roof, we should be doing that. If it puts us at risk, no, you shouldn't be up there in the middle of a lightning storm putting a tarp on the roof. Okay. But if that's over with and you can board up a window, you should do that. Okay. That's a great guide though, and I think it was put in the chat. Okay. When it comes to processing and payments, you want to make sure that, one, don't feel rushed. You are never going to be forced to take a fast payment by any carrier. They might provide an advanced payment, which is absolutely fine. They may also include payment for with the lien holder, especially if your home has got a mortgage on it. But you have the right to ask all sorts of questions, um, but you do not have to be rushed through the process. You can question everything. I would absolutely encourage you to document all of your interactions with your claims adjuster and advisor. They're going to change. It's not going to be the same person. So you want to keep a record of all those interactions. It's just so important because it's gonna be a cumbersome process, especially if there's been multiple losses in an area. And I wish I could tell you, oh, it's easy. It's going to be super simple. Like, a one-off, fender bender in a car, much simpler than a neighborhood that encountered a wildfire. So you just want to make sure that you are kind of methodical about it. And if you can, be a little bit patient. Okay. Um, I touched on this a little bit. Not feeling rushed about it. Ask a ton of questions. I mean, there is no harm in saying, hold on, wait a second. I need to take a breath here. Okay. Because they want to get it settled as fast as possible and move on to the next one. But the last point on this slide is it's completely fine and appropriate. Take that pause, ask for everything in writing as much as you possibly can. Okay. Get it in writing. Okay. Unfortunately, when disaster strikes, so do the nefarious folks that come along. And there are tons of disaster scams that are out there, primarily contractors that'll come along and say, yeah, we'll get this fixed for you. And you just sign over your benefits and we'll take care of it for you. Be aware of that. And if it smells or feels wrong, it's wrong. Um, and so don't let yourself get sucked into that. The disaster scam booklet that we have on the website that's here as well. Take a look at it. But if someone comes knocking on your door post a disaster like a wildfire or a windstorm, or tells you they're from the state, that's just a big old red flag, and you're gonna find yourself being really upset. In closing, I went a little bit over maybe. Um, the DFR advocates are there to help with kind of all of this stuff. If you're finding yourself where it's difficult to communicate with your insurance company or a financial service company of any kind, call them. The advocates can help you maybe just explain some of the coverages or explain some of the terminology. If you've had issues with a claim settlement, this is the our advocates are not there as your first path. You want to talk to your insurance company as your first path. But if you've tried and you're not getting anywhere, call the advocates. If you're not getting responses from your insurance company, by all means, call the advocates. If you feel like you've gotten scammed, this is an important one because the scam incidences have jumped dramatically. And depending on the type of scam, we would certainly encourage you to make that phone call as quickly as possible because it's important who you get in contact with next, whether it's a federal agency or somebody else, because how quickly you can stop that or get your money back. Or if you feel like you've just had your rights violated in any way, please reach out. Our advocates will do everything they can to help you out. So please give us a call. We'll do whatever we can to guide you or get you to the right resource to help you out. There's several resources. I think you were going to be sent a sheet after the fact. I got a couple here. Our own website, National Fire Protection Agency, Oregon Department of Emergency Management, ready.gov, NFIP, or National Fire Protection I'm not sure, National Flood Insurance Program. And then if you want to get real into the weeds on the Cascadia region earthquake work group crew on the Cascadia subduction zone, all sorts of stuff to put you to sleep. But take a look at that one. We're all over social media if you want to check that out. Always encourage you to be prepared, and lots of ways to get a hold of us if you're interested. And if you feel inclined, you can do a survey. So thank you so much for your time. I appreciate it.